The euro versus US dollar moved above the 100-day moving average at around the 143.49 level here today. That's this blue line in this chart. I'll put a horizontal line across that level on the hourly chart. You can see here when the market broke through that level, there's no turning back. Market moves sharply to the upside, breaking through some key levels in the process. One, the 143.70 level represents this high going back to August 4th. The next level was this 144 level. The high going back to August 10th. That level also corresponded with this trend line here, this channel that the market was in. Break above that level also led to further momentum to the upside, taking ourselves above the August 8th high, and then even through the highs that we reached going back to August 1st. So we made new monthly highs here today. The market breaking above the 51 level, and that's where we're currently trading right now, around the 53 level, is the new high. Since the break of the high, we've had some consolidation here. This move to the upside is unsustainable, but we've had this flag formation forming over the last few hours, and the ability to move above that flag keeps me a little bit more upbeat here. We're going to need to get above the 64 level. That was our initial high to today, and then the 76 level to start propelling this market further to the upside. If the market should now break below the 34 level, that's back within this bear bull flag, then all bets off and look for a move down toward the 25 level, look for a move down toward the 144 level. So key point here for the market, breaking above this bull flag should see higher prices in this currency pair in the short term. We'll be looking for that momentum. Let's take a look at the sterling versus US dollar, and off of this chart we've also made some sharp moves to the upside. The first level I want to bring up is this 200-hour moving average. Admittedly, the market moved a couple times above that level. It tried to tried to move above it, and then failed and came back down toward the lows from Friday afternoon. The ability to find some support against that level, move the market again above that level, and this time we also fell that back down below the 100-bar moving average, but it was only brief, and the move below that level finally spurred the market to the upside here. Put a parallel trend line here across from the bottom here across the top, came up to that top side trend line, found some resistance, and then broke through the level. The trend line currently comes in at the 63.71 level. It's 163.71. Stay above that level. The bias remains to the upside, and we're in this channel right here. If we move below that level, we're probably going to correct, or we should correct, back to the downside. Where could we go? Well, I put a Fibonacci here on this move to the upside. The 38.2% retracement comes in at the 80 level, break below that level. Could see the market move out head toward the 40 level. That level represents the 100-bar moving average on the 5-minute chart. I can also extend this moving average all the way down to this low and see that the 38.2 comes in around the 49 level. So somewhere between the 40 and 49 level would be the target on the downside for the sterling versus US dollar. Let's take a look at the dollar versus yen. We had this trend line coming across the tops here, broke above that level in early trading, and then fell back below it in New York trading. We just came up and tested that 100-hour moving average at the 76.79 level and stayed below that, but very narrow trading range here. Move back above the 79 level, look for a move toward the highs at the 99 level, and then high for the day at the 77.08 level. This level going back to last week came in at 77.15, and then we have the 77.22 level. That's the progression to the top side. Stay below this level, look for support down against the bottom side of this trend line. That trend line currently comes in at the 76.54 level. Let's take a look at the dollar versus Swiss. This currency pair continues to move sharply to the upside. Actually, today we gapped to the upside, and then the corrective move came down, filled the gap. Well, it actually came up a few pips short, and the market has since started to move a little bit more to the upside. Off of the 5-minute chart, you can see the sharp move to the upside, correction move to the downside. Stayed, sort of have this bull flag going here for the currency pair with a couple different lines here. This, I think the market was more intent on filling that that gap than anything in the move to the downside, and now we're seeing a bounce off of that level. Resistance up above at the 78-71 level. Is the market going to find resistance against that level, against this trend line? Well, traders can define their risk against that level, limit their risk, and we'll see if the market holds it. If it moves back above that level, get above the 200 bar moving average, not far from that level at 78.90, and the market is back to the moving to the upside for that currency. Let's take a look at dollar Canada next, and take a look at the daily chart here. We're moving down toward the 200-day moving average. That 200-day moving average is the green line in this chart. Comes in at 98.09. Let's call it 98.10 for the dollar versus Canada. On the hourly chart, we're also approaching key support prior to that 10 line at the 98.28 level. That's a 200-hour moving average, and it looks like the market has been above that 200-hour moving average since September 28th. So this is a key level of support here for the dollar versus Canada, and we'll see if the market can hold this level. If it can, look for a rotation back to the upside, but with the 100-hour moving average starting to move to the downside here, that gives it more of a bearish bias. The problem is, these two are a distance away from each other. This is at 98.75. This one's at 98.28. So a lot of times you get support or people who had sold against the 100 bar moving average here earlier a few hours ago coming in, buying the market, taking their profit against a 200 bar moving average, and looking for some a slowing and a move back to the upside.